Welcome to Stock Talk. We're here to cut through some of the noise from recent financial headlines.
That's right, pulling out the key insights.
Exactly. So you can really get a handle on what's moving the market. And hey, if you like what you hear, please subscribe for more deep dives.
Definitely helps us out.
And a big thank you today to StockTelescope.com. They provided some really insightful info for our analysis.
Yeah, great stuff from them.
So today we're looking at a market that's, well, sending some deeply mixed signals, wouldn't you say?
Oh, absolutely. You've got tech giants, swapping places, confusing job numbers, big political moves.
Right. So our mission here is to sort of find the hidden threads connecting all these headlines. What does it really mean for your investments, your outlook?
Let's get into it.
Okay, let's dive right into tech volatility. Tesla, for instance. TSLA shares just dropped 7%,
Yeah, ahead of their Q2 delivery results.
which are expected to be down, right? Like 13% year-over-year drop.
That's the expectation. And, that pressure cooker situation with the whole Trump-Musk feud probably isn't helping investor confidence either.
Good point. What's fascinating there is how that dip isn't just about, say, a cooling EV market overall.
No, it's more nuanced. It really kind of highlights this new vulnerability, how quickly personal brand politics can actually hit shareholder value.
Even for a huge player like Tesla.
Exactly. It just shows how unpredictable that executive influence can be these days.
Yeah, absolutely. And it's not just Tesla feeling the heat. Look at Microsoft. They just announced 9,000 layoffs.
Right, about 4% of their global staff, part of a restructuring.
But then, almost in the same breath, Nvidia pops back up, reclaims the title world's most valuable company.
$3.86 trillion, overtaking Microsoft again.
So what does that tell us? Where's the market really leaning?
Well, Nvidia getting back on top isn't just AI hype, though that's part of it, of course. It subtly signals a shift, I think.
A shift how? We're kind of moving from valuing these big, diversified tech giants focused on efficiency, like, Microsoft's layoffs might suggest, towards this intense focus on foundational stuff, high-growth infrastructure.
Like the chips Nvidia makes, the picks and shovels for the AI gold rush.
Sort of, yeah. But seeing that play out right at the very top of the market cap list, it really shows where big investment dollars are flowing right now.
Okay, interesting. But it's not all cuts and rebalancing in tech, right? We've also got Figma.
Yes, the creative software company.
They just filed for an NYSE IPO, and their numbers look, well, pretty strong. Q1 revenue up 46%.
To $228 million, yeah. And $45 million in net income. They're aiming for a $12.5 billion valuation.
So what's the significance there? A creative software firm doing well amidst all this other tech churn.
It's actually quite significant. It shows that even when some parts of tech are, consolidating or restructuring, there are still pockets of really high growth.
Especially in tools people actually use day to day. Exactly. Tools that boost productivity, collaboration, especially for the creative economy. Seems demand for software that genuinely empowers work is still really strong.
Okay, so while tech figures itself out, what about more traditional industries, like autos? There's a surprising story there, too.
Oh, yeah.
Ford's Q2 U.S. sales jumped a lot, 14.2%.
Wow, okay.
And GM was up, too, 7.3%. And this is despite that weak EV demand we mentioned earlier.
Huh. So people are still buying traditional cars.
Seems like it. Does this suggest something deeper about what buyers actually want right now?
Well, it certainly suggests that while the EV transition is happening, there's still very, robust demand for gasoline-powered vehicles.
Practicality still wins for many.
It seems so. Practicality, known value. It challenges that narrative that everyone is rushing to EVs immediately, shines the importance of those traditional product lines, even while companies invest heavily in the future.
Makes sense. And that same kind of tension, that push and pull, we're seeing it in the wider economy too, especially with jobs.
Oh, the job numbers? Yeah, those are confusing.
Right. Really conflicting signals. On one hand, the Joel Pease report, job openings actually rose in May. 6-month high, 7.77 million. Mostly hospitality restaurants.
Okay, so sounds positive.
But then the ADP report for June shows the private sector lost 33,000 jobs.
Lost jobs. Okay, where?
Particularly in education and business services. It's weird.
It really is a bit schizophrenic.
And Fed Chair Powell just threw another wrinkle in, saying rates would have been cut if not for Trump's tariff plans.
Right, which brings up the tariff issue again.
Yeah, explain that contradiction a bit. How do tariffs fit into these job numbers?
Well, these conflicting indicators paint a really complex picture.
Wow.
And that growing tariff burden, It's increasingly hitting small and mid-sized U.S. firms pretty hard.
How so?
They're struggling to move production out of China because, well, domestic costs are rising and retailers are pushing back on price increases, so they're caught in the middle.
Ah, okay. So that adds pressure on job creation, contributing to this confusing jobs picture.
Exactly. It's another layer of complexity.
And speaking of politics impacting the economy, the Senate just passed Trump's spending bill.
Right, the one with the big tax cuts for the wealthy and the Medicaid cuts.
Yeah, now it goes back to the House. What are the sort of potential economic ripples from that?
Well, connecting this to the bigger picture for, you listening, this could have pretty substantial economic implications.
Like what?
Those tax cuts could shift economic benefits, maybe influence spending patterns where capital goes, and the Medicaid cuts, that could impact healthcare access, spending.
Mm.
It reverberates.
So it sets the stage for maybe a reordering of economic priorities.
It certainly could. It's a significant move to watch.
Okay, so we've covered a lot, rapid shifts in tech leadership, this really mixed bag on jobs, these big political moves. So what does all this actually mean for you, the listener, trying to understand the market today?
That's the million-dollar question, isn't it? I guess the thought I'd leave folks with is this. Considering these really divergent signals, the economy, tech leadership, that spending bill, what underlying shifts might we really see in consumer behavior and corporate investment strategies, say, over the next quarter?
Okay.
It's a fascinating puzzle to watch unfold, that's for sure.
Absolutely. Great points to think about. Well, thank you for joining us on this Stock Talk Deep Dive.